Definition of accountancy, role of accountancy, and limitations of accountancy. Meaning: accounting is the art recording, classifying, and summarizing in a significant and in terms of money transaction and event which are in part of interpreting the result thereof. Amit, share next screen. No definition. Accounting is defined as the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of the information. American Accounting Association, a service activity whose function is to provide quantitative information primarily financial in nature about economic entities that is intended to be useful in making economic decisions. American Institute of Certified Public Accounts. Now I invite to Amit Sharma to continue this presentation. Thank you.
Good morning, sir, and all my dear friends. My name is Amit Sharma of class 11. I am continue the PPT. Role of accountancy. The role of accountancy is the purpose of accountancy is to produce financial information to the stakeholders of business, management, intervisors, and creditors. Accounting measures and summarizing the activities of the company and communicate. The subjective distinction of the accounting vary. I
पहले
would
वो शेयर करो, वो शेयर करिए, पहले स्क्रीन तो शेयर करिए, दोबारा करिए.
I would request to Aishwarya to continue the presentation.
Good morning to one and all. I am present here. Myself Aishwarya Vyas and I am a student of class 11 Commerce. Thank you, Amit, to hand over me the next slide. The limitation of accountancy. Limitation: bring infallibility and rigidity. Invoices high costs, difficult to choice among effectiveness, scope is restricted, and time of consuming. Amit, please share the next slide. Limitation of accounting. First, bring infidelity and rigidity. In terms of financial accounting, flexibility can be defined as the possibility to adopt financial information within the opportunities offered by the accounting standards, whereas rigid constitutions refers to that one which could only be amended by a very difficult special produce. Second, difficult to choose among alternatives. Choose among alternatives has to experience, explanations, and research and analysis are the three common tools for choosing decision making. And now, and the limitation of accounting. First, time consuming. Time consuming is something that cannot be done quickly, but which instead require a long period to complete. An example is the process of limiting of a very difficult pattern that takes you a month of complete. Second, invoices high casting. The cash amount we charge for our assets costs including to cost necessary to get an assets in place and ready for use. Third, scope is restricted. A scope friendly is a restricted on the ap- on the applicable of an other quantities report that may arise from the inability to obtain sufficient appropriate evidence about the component in the financial statement. Some scope limited arise for reasons that are beyond the control, such as fire and flood. Hmm. Thank you all.